Hey, welcome back to Living in Minnesota. It's a new month, so it's time for a new real estate market update. I'm going to tell you what's going on around the Twin Cities if you're thinking about buying or selling a home in 2025. And most notable thing, Twin Cities sale prices actually stayed flat for January, which was very strange, very confusing, but we're going to get back to what that means because first I want to start you off with the number of new listings that hit the market. And because I did the big year-end wrap-up in January, every year I do 2 months, so we're going to talk about both December and January's numbers, and those look really strong for the number of new listings. As you can see here, we've been expecting more homes to be hitting the market. We did see that both for November and December, and we saw those in pretty good numbers. So we hit almost 65,000 new listings that got put on the market. Primarily what I'm interested in right now, to be honest, is more January's numbers than December, because pre-holidays and post-holidays are very different things. And here's what those are going to look like. The previous slide was the rolling 12-month average, which looks very good. But then this is going to be that month-to-month change. Now, as I'm going to reference here and again in a second, but we've seen the bottoms not going as low, and we've seen the tops not going as high with both our sale prices, new listings, a couple other numbers. So that trend actually did continue here. You can see December's numbers there, a little more than 2,600 homes that were put on the market in December. That's always the lowest it is annually. And then January, like you can see, does spike up. Now, the 4,200 that we had for January is actually one of the highest Januaries we've seen in quite a long time. I believe it is once in 10 years have we seen a number higher than that. And that was actually during COVID, which everything got really wonky. So those numbers are both really good. We saw more homes get put on the market in December than we normally would, and more in January as well. Quick pop quiz for you. As we jump into the spring months, which month do you think is going to be the hottest month of our entire year? Is it January, February, March, April, May, June, July? A lot of people think it's happening during these summer months. So you've probably got a month in your mind that you're thinking of right now, and I'm going to guess that it's not March. This is a graph that I showed last month for you, and this is what our number of showings per listing look like. Now, what does this really mean for you? This is really going to tell us how many buyers are out there looking at homes. And obviously, a good number of those buyers are also selling. So generally speaking, this is going to show kind of how hot those months are. And March is going to be our hottest month, then second to April, and then coming back to February, if you can believe that. So we were already seeing those January numbers spike really well as far as the number of new listings out there. That should couple with buyers that are out there at the market as well. So we're looking like we're going to have a pretty hot spring, which does peak kind of around March timeframe as far as the buyer activity. And directly related to that is going to be the number of days on market. That's how many days the home goes before it goes into pending status. And our median around the Twin Cities, this looks like I did a typo because it's November 2024. It was 22 days on market, but actually that's not a typo. That's been the exact same number for November, December, and January. All were at 22 days on market. So we're expecting that trend to keep coming up, meaning that homes wouldn't be selling as quickly. However, that actually hasn't changed. We would think there would be a little bit slower coming into the spring market. However, that didn't really happen. And we're definitely not expecting that to be trending down with the next few months because this is that rolling 12-month average is what you're looking at here. So as we speed up and go into the hotter months, I wouldn't be surprised actually if this number comes down. Although we're expecting it to trend back, the fact that it didn't this winter shows us we're going to have some higher numbers. And so we should see that number to stay fairly quick. Again, what does this mean? It just means the homes are selling quickly. They have sold quickly through the winter, and I'm not anticipating that's going to change as we're going into our spring market. If you're curious what those month-to-month average are, here's what December and January looked like. 35 days for December, 46 for January. Technically, it is slightly higher than we have seen the past couple of years, but if you look at the bigger picture, what you're looking at is a 10-year graph. You can see that's about right for what our market has been doing prior to COVID, but especially if we factor in that September month that kind of sat flat for us, I'm not really surprised with those numbers. One thing that did surprise me, however, was our month supply of inventory. You guys know how much I have a love-hate with this graph. The lower on this graph you are, the more seller-favored it is. The higher we are, the more buyer-favored we are. Balanced, technically, they say is around 4 months supply of inventory, which we haven't been to for almost a decade. So we've seen this number going up. Now let's rewind a little bit for those that are new to the channel. This is around COVID. It got very competitive, became much, much more seller-favored. So if you heard of crazy stories, that was during this really low point here. We've been seeing that curve up, which we like. I mean, we don't want to see that. That's a really good rebound that we're seeing in the market, getting towards being more of a balanced market. And I predict that we're not really ever going to go back towards like the 6-month side of this, which they say is balanced between 4 and 6. But we've wanted to go back towards 4. That's the good news. However, what was really interesting, let me back that off for you. We had seen this number sitting flat, which we thought was kind of curious, kind of strange. Why haven't we seen that coming up? Especially because interest rates really didn't come down. Well, we did technically see interest rates drop in the middle of last year, and that's one of the final slides I'm going to have here for you is where we're at with interest rates and where those are going. So we did see a little bit of a push as the interest rates came down. More buyers got into the market, which would make things more seller favored and would keep this this graph from curving back up, keeping us into a slightly more seller-favored market. And then we saw that number, not too surprisingly, that went up in November, right? As we continue the trend up, things ease up a little bit. And then they popped back down. So that was the surprising point. We were at 2.4 for a hot minute there. We then came back to 2.3, and we sat there for 2 months with both December and January's numbers. So very curious. I mean, I don't think that that's really earth-shattering news for buyers or sellers. It's not some major swing, but it just wasn't something that we were expecting at all, as you guys have been following me for a month. I mean, we're expecting this number to keep going up. Even if it does kind of slow down, I wouldn't be surprised with that type of curve. I'm not really expecting this. That was out of the ordinary. What do we expect is going to happen from here? I don't know. I'm still planning that we're going to be doing this kind of a number, maybe as a little bit of a fluke, and then we'll keep going up. I think that's pretty realistic. But overall, as you can see here, the lower we are, the more of a seller's market we're in. It is still the type of market, regardless of the seasonality of it, we're still very much in a more seller-favored market. However, buyers do have a little more time to think. They got a little more time to plan and breathe. And do we want this house or that house? Their decisions don't have to be as rushed as we have in the past. There's also different data points that have come out that are saying that buyers aren't waiving inspections nearly as often. They're getting concessions from the sellers towards their closing costs. They're not paying for any potential appraisal gaps. So if you had heard of those things, just know that they're primarily going away, and we're not seeing that really extreme competitive market, but that things are still moving pretty quickly. If you're especially looking at the spring, as you saw on one of those previous slides of the number of showings happening, our spring market really has already kicked off. We're already into February. March will be the hottest as far as buyer demand goes. As we're higher on that graph for the number of showings, that's going to be the more competitive of market that you're going to have to be for a buyer, or the better terms that you're probably going to receive as a seller. So that's just what you're looking at right here. One final note that I will throw in, I'm not going to reference it a lot because it hasn't really made a big significant difference in our local market, is in regards to the NAR settlement. Some people will ask about that occasionally. We're still seeing sellers paying buyers commission. About 95% of the time was our data from January. So that's really what's happening. Buyers really don't need to be concerned because the vast majority of the time, you're not going to be paying any of that anyhow. So why don't we take a look at those interest rates that are affecting buyers the most? And here's generally what we're seeing. So why don't we actually start over here on the right side graph? This is going to be your 1 year graph here. So first, you can see we're at 6.99 there, of course. As sort of predicted, we always see a little bit of an improvement in interest rates prior to any presidential election. So no big surprise. We did see that. It wasn't particularly significant because we had also seen that recent spike. So even though we saw this, we did see that. So really, there wasn't anything particularly notable that happened in relation to the presidential election. I do think there's some relief that's felt just after we get through the elections as far as the markets are concerned. And so now that they know what to predict a little bit, I do think we'll still see those interest rates improving over the next 12 months. I'll give you those rate projections in just a minute. But as far as our current interest rates go, we are at 6.99, and that's the lowest that we have seen in 30 days. So as we continue to see those things improve through the spring market, I think buyers are going to be getting gradually happier as we go. So as we switch into those mortgage rate projections, you can see we were at 6.99. This is a couple months old now, but they were projecting by the end of 2025 us being at 6.33% interest rate. I don't know that that's changed, and we don't really see a lot of these predictions on the large scale from all the different companies except for once a year. So we'll see how this changes over time. But overall, they're expecting things to improve, just not really any major, significant, or sudden shifts in interest rates. Finally, why don't we end with those home prices, and I'll get back to how those have changed or not in the last couple of months. But we're expecting 3.1% price appreciation over 2025. So while you'll see a little bit of relief in those interest rates, homeowners are also going to be able to sell their homes for about 3% more, we're expecting in 12 months from now. And then where we're looking at currently, this is the month-to-month change, as you'll see with that bouncy ball. What's really strange is we didn't see any change in our median sale price between December and January's numbers. Now, that always happens. What's really strange about that is with all of these, we always are bottoming out. And then typically January or maybe February is our lowest month. So how are we interpreting that? Personally, I don't think there's any major concerns for buyers or for sellers, really. As I've mentioned before, sometimes I feel like I give you guys the same information. I do apologize. But we had seen the peaks of the summer and the valleys of the winter getting lower and lower, or they had been, I should say, for a little while. Then all of a sudden we saw COVID happen and things went bonkers, actually kind of in both directions. And we're seeing that gap starting to close. So I'm really enjoying seeing that as we're seeing those gaps come together. I think that's probably primarily the explanation for why we didn't see sale prices drop more in January. But it does communicate that things are simply going to be more competitive. Sellers didn't drop their sale prices potentially on homes that didn't sell, meaning sellers were less motivated. They were still having good activity. So their prices didn't come down as much, and there were still plenty of buyers out there in the market. So how do we think that's all going to shape up in the next little bit? Well, let me clear off my screen here. I think it's fairly safe to assume that as we see this bottom not going as low, we will also see the tops not having as much of peaks. However, I do think it'll be something kind of like this where we're still going to see that 3% higher sale price is going to keep that number getting raised. And we just didn't see as much relief. We're not going to see as high of peaks in the summer and not as low of a valley in the winter. So there you go. That's a look at what's going on around the Twin Cities. My name is Joe Carmack. If we haven't met, you can find all my information in the description down below, and I would love to help you with your next move. Don't hesitate. Shoot me an email, a text, a DM, whatever works for you, and I'll see you next month.